There are so many people on the sidelines right now, whether they're forced on the sidelines because of unaffordability, or rather they're choosing to be on the sidelines, that have absolutely no idea on what to do next in the housing market. And that's exactly what we're going to cover today. Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and this is day number 3 taking you guys outside. I'm at the same park. This is East End Park. Hopefully we'll see some more cool stuff. I still don't have my electric scooter. I will have the electric scooter one day, and I will figure out how to mount the camera on there so that I can talk to you guys and ride an electric scooter. My plan is to keep walking down this trail and to take you guys to a really cool area that I still haven't showed you guys. Regardless, I want to talk about what to do next in this housing market with all of this chaos. And I'm really going to hone in on people that are on the sideline right now that are potential and future buyers. I'll touch a little bit on what sellers should do right now. And depending where you're at with your home buying journey, you may want to do things a little bit differently. But the first thing that I really want to go over, and I really want you guys to understand, is most people need to understand, and this is where we start, that the housing market and real estate runs on a cycle. All right, things don't happen overnight. A lot of things take time. And if you go back and you guys review the data, it's really easy to see that generally spring and summer home values go up, inventory goes down, bidding wars, high competition, and things like that. But come fall, come winter, a lot of that stuff starts tampering down. So in a normal housing market, generally the best times to purchase real estate is between December and February. But I'll tell you guys this, none of that really matters if you can't qualify for a house and you can't afford a house. So I'm gonna start by talking to the potential and future home buyers on the sideline that are forced on the sideline, whether it be unaffordability, maybe low credit, maybe they don't have the down payment. So I'm going to talk about what to do in those types of situations. I think I'm especially qualified to talk to consumers that are essentially forced to the sideline, and really consumers that have any type of struggles with their financial situation. I think I'm qualified to talk about that because it happened to me around 2009. I had lost everything. I had a foreclosure, a repo, a bankruptcy, a tax lien, and a whole bunch of depression. So I did not lose depression. I was awarded that. But some of the things that I don't talk to you guys about is what I did after I lost everything. How was I able to reestablish my credit? How was I able to qualify for homes again, being that I had a foreclosure, a bankruptcy, repo, and tax lien? Essentially, your credit can't get much worse than mine was. One of the main problems with my own personal situation, and the reason why I struggled for 9 years, is I lost hope. So the number one thing we don't want to forget to do is to remain hopeful. And I'm not talking about false hope. I'm talking about hard work hope. Our goals shape our approach. Hard work hope. If I would not have lost hope, I would probably have only struggled maybe 4 years. It still sounds like a long time, but I'm going to tell you guys, the difference between 9 years and 4 years, especially when you're struggling, it feels like an eternity. So if you are struggling, okay, starting with credit. Now, what I had to do personally when my credit was destroyed, essentially I had to reestablish my credit. Now, the hard thing about reestablishing your credit is your credit's all messed up. For example, back in 2009, I was ready to reestablish my credit. I go into Bank of America, they pull my credit, and they say, get out of this branch or I'm gonna call the police. You basically ripped everyone off. So if you wanna reestablish your credit, understand you will have to settle generally for something that's called a secured credit card. And all that is basically you securing the credit card with a portion of your money. So for example, I was able to get a secured credit card that had a credit line of $250, but I had to put down $150 to secure that credit line. So if you have bad credit, remember the first thing that needs to happen is you need to reestablish it. Generally, the best way to do that is get credit cards that are secured and start using them wisely. And when I say wisely, it does not mean get a secured credit card and go to the movie theaters and go out to eat and get gas. You only are getting a secured credit card to establish your credit, and you're establishing your credit to purchase a house. So you don't need to worry about percentages when it comes to utilization ratio. Utilization ratio is one of the most powerful things when it comes to calculating your credit score, outside of derogatory information, which brings me to my next thing. None of this will matter unless you can stop the bad stuff from happening. So if you're behind on your credit cards, if you have utility bills that are behind that are about to go to collection, make sure you do everything in your power to stop that bad stuff from happening. Now, once you're able to stop the bad stuff from happening, go get your secured credit cards. Now, I was able to get 2 secured credit cards. And the strategy that I utilized, because I knew, don't use the credit cards, but I had to charge at least once every 6 months or the credit card would not report to the bureaus, and we want it to report to the bureaus. So the strategy that I did is the first of every month on both of my credit cards, I would go out and I would buy a bag of beef jerky. And honestly, you guys may think that's ridiculous, but I have to tell you, when the first of the month came, I felt so empowered because I got to go buy 2 things of beef jerky. And while I was doing that, I was establishing my credit. So I'd buy beef jerky, I would wait for the card to bill, and then I would pay the whole thing off and then buy beef jerky again. And I held that pattern for about 2 or 3 years, and my credit score went up over 100 points. So again, if you have to reestablish your credit, you can't get approved for a credit card, you may want to get a secure credit card. But another magical thing that I was able to do in my situation is when I met my wife. When I met my wife, she had phenomenal credit. Way better credit than me, right? Almost perfect. And I'm like, oh my God, how is your credit so great? So what she did is she co-authorized me on 3 of her credit cards that were in great standing that had 0 to no balance, because you do not want to be co-authorized on a credit card that is in bad standing. Now, the disadvantage of being co-authorized on an account is the account holder is liable for you, and you are essentially an authorized individual. So there is a little liability there, but co-authorization is like that magic trick to essentially get a massive credit score increase within about 45 days. So when my wife did that on her 3 credit cards, my score went up approximately 120 points in 45 days. So that is a magic trick. Now that's just one piece of the pie is your credit. Now, if you are struggling with your credit, I would always suggest starting from the bottom up. And when it comes to purchasing a house, absolutely no one should be buying a house, in my opinion, that is in consumer debt. Anyone that is struggling to pay their bills right now, in my opinion, should pump the brakes and take a step back. And that brings me to the other thing. If you are one of these buyers that is on the sideline because you're forced on the sideline, as crazy as this sounds, and I know this sounds crazy, consider yourself, at least again, in my opinion, as someone that just dodged a bullet. And we see that once again in these buyer's remorse surveys. So in other words, you guys, work on your credit, keep establishing it, keep your credit score increases, and generally what you want is you're gonna want at least a score, a FICO score, a middle score of 620. Now there are lenders that can go down to 580. In order to get the loans when you have a low score around 580, you need something called compensating factors, which brings me to the other thing. One of the compensating factors is having money, okay? Lenders want you to have money after you close. They don't want you to spend all of your money on the transaction. So if you're on the sideline, again, forced on the sideline, one of the best ways for you to save money, well, one is to put a percentage aside, say like 10%, right? So 10% of your gross income goes into a savings account and you just save money. Now that's a great way to do that. But personally, when I want to invest in something, I don't worry about these percentages. I just save as much money as possible. Literally, as soon as I'm done paying my bills, we put all of our money in a savings account. It's a really good way to save money. Now, what's really, really important, and the same thing happened to me, in order to save money, you guys have to understand how you're spending the money. One great way to do that, again, mint.com. It's gonna maybe take you a couple hours, but I downloaded mint.com, mint.com, and I was able to link my credit cards and my bank accounts and things like that, really everywhere I was, anywhere I spent money, and it breaks down my spending habits. The reason that's so important is it was, when I did it for my own personal life, it was incredibly eye-opening what I was wasting my money on. So just that 2 hours that I took to set up Mint, to monitor my spending, y'all, I was able to cut my budget $1,000 to $2,000 a month. I mean, just eating out and subscriptions alone accounted for over $2,000 a month in my expenditures. When I found that out, I felt so much shame when I found that out. But regardless, you're gonna wanna save as much money as possible. Now, when it comes to a down payment for a house, just remember, there's a down payment. FHA has a minimum down payment requirement of 3.5%. Conventional, 5%. There's also special conventional programs that allow you to move in with 3% down. In addition to that, there's stuff called DAPs, which are down payment assistant programs. Now, with a lot of those programs, you can actually move into the house with nothing out of your pocket, so long as the seller pays your closing costs. So remember, on top of your down payment, there's also closing costs, and closing costs can be 3 to 4% of the loan amount. And some of the closing costs include lender fees, appraisal fees, inspections, insurance, property taxes, surveys, and things of that nature. But just remember, save as much money as possible. The other thing, work like a madman when it comes to qualifying for a loan. Not only can you use your salary, of course, I gotta go back to the car because my GoPro is about to die, so I gotta go back that way. But what I was gonna say is basically an hourly income or a salary is really easy to use as qualifying income, but you're gonna wanna use bonus, overtime, and commission. You need a 2-year history of that to use it as qualifying income. So make sure if you have the opportunity to make more commission, overtime, and bonus, you do that so that you can use that income to qualify for more of a house. So that's what we should be doing right now if we're forced on the sideline, whether it be because of unaffordability, credit, income, or we don't have any money. And the last thing, again, just real quick, your mindset and your knowledge. Do not forget, become an expert on loan programs, down payment assistance programs, and use a realtor to help you understand what's going on in your local market. So I just got my spare battery, put it in my GoPro, and I'm a little bit bummed because I'm not gonna be able to take you guys where I wanted to take you guys on this video, so it's gonna have to wait for our next video. However, we're on to the next part where I'm gonna talk to you guys about what we should be doing if we're on the sidelines, but we're already qualified. We already have purchasing power. So again, just to conclude where I left off, if you're priced out, if you have bad credit, always remember, work on your credit first, which is essentially your utilization ratio for your credit cards. Max utilization ratio 30%. A trick to reestablish your credit if you have really bad credit: secured credit cards, co-authorized user, stop the bad from happening, save as much money as possible. And remember, make as much money as possible, because your overtime, commission, and bonus, as long as you have 2 years and it's not declining more than about 20%, you're able to use that as qualifying income. Now, if you've already done all of those things, like I have, for example, I have no consumer debt. I have over 6 months of my expenses saved after I spend my money on closing on the house. My credit is phenomenal. Depending on when I run my credit, it's the high 700s or 800s. So my credit's great, my spending habits are great, I'm saving money, I'm making money, everything is great. Another thing I'm gonna add, what we should be doing right now, if we do have that purchasing power, is always continue to increase your purchasing power. You can always get your credit score up, you can always save more money. Don't get lazy just because you've made it to one milestone. Make yourself an even better borrower, especially if we go into a situation to where there's credit tightening. The more that credit tightening happens, the more important it's going to be to have really good credit and to be an extremely strong buyer. So in other words, if things start breaking, it's going to be a lot harder to get a loan, so make sure you're doing everything you can to increase that. Now, I'm going to add as well, one thing that's so important to do right now is set goals for yourself. And what I mean by goals is ask yourself what you're looking for. Ask yourself what you can afford, and also show yourself how much values are truly. A really good way to do that, again, if if you're on the sideline, start interviewing realtors. Find a realtor that will work with you and that will provide you data to give you a better understanding of what's happening. For example, if you already know where you want to live, if you know the subdivision, basically know the subdivision, start doing those market analysis for the last 3 years. And not only do it with prices, do it with rentals as well. I honestly think that some people should get their realtor license and become a realtor themselves. I think that by doing that, it gives you a really strong ability to really understand value and to understand trends and to understand the cycle. But do not take that for granted. Use the realtors, take advantage of their services, and start understanding what's happening right now. One of the things that I'm seeing happening right now is even these well-qualified buyers are falling for the fear of missing out. If you want to purchase real estate right now, you should absolutely not be purchasing real estate if you're doing it based on fear. You should not start home ownership, probably the first large transaction of your life. You shouldn't start that with fear. Understand the cycles and understand right now in 2023, we didn't even make it to the end of summer and already inventory is shooting back up and prices are already starting to go down. And again, you guys, we didn't even make it through all of summer. I believe the longer we wait, monitor the market, increase our purchasing power, find the right deal, find a great deal, which means undervalue on a house that we love, we're gonna wanna execute that, because the reality is this, okay? As prices continue to fizzle, there will be a certain number of people, like investors that are on the sidelines, that will come back into the housing market and buy houses. So it's really important that you don't procrastinate, right? And you don't get stuck on the sidelines in fear, okay? Fear of missing out or fear of purchasing too early. You need to understand what it is you're looking for. Are you looking for a great deal? Are you looking for an affordable payment? Are you looking for something that is next to great schools? You have to figure out what you want. If you don't figure out exactly what you want, it's gonna be really hard for you to navigate through such an emotional transaction like buying a house. So figure out what you want, figure out a comfortable payment, and please, I want you guys, anyone that's interested in buying right now, I want you to go back 3 years on the property that you're interested in purchasing. I want you to go back 3 years in that subdivision, and I want you guys to look at price per square foot and the rent range price per square foot. Because with that information, you will empower yourself. Now, personally, what I'm looking for in my own deal, here's what I'm looking for. I wanna find a great deal on a house that I love, and I'm gonna make the seller pay every penny of my closing cost, as I always do. So I'm gonna go in, I'm gonna make an offer under market value, and I'm gonna know what under market value is because I've done my homework. So I'll make an offer under value. I'll ask the seller to pay closing costs up to about 10 to 15,000, depending on the purchase price, and then I'm gonna close. Really what I'm trying to say is don't assume you have great purchasing power. Understand and know for sure. Another thing that I'm doing is I'm constantly staying pre-qualified, which essentially means I have a bank that said, Travis, you're qualified, here's X amount of money, go find a house, the money is yours. So I have all of that done. And that's an incredibly important piece of this, again, because of credit tightening, lending changes, and things like that. Now, in order to get properly pre-qualified, there's a few things you need to do. What I did is I sent all of my verification documents into a lender. Verification documents like, W-2s, paycheck. Oh my gosh, that squirrel scared me. That little squirrel, man, I'm skittish. Y'all see that squirrel? I didn't know what it was. I thought it was a snake. It was like burrowed. Anyways, what's wrong with me? The housing market, man, it's got my nerves shot. All right, anyways. So generally what you got to send into a lender is income documents like W-2 for 2 years, tax returns, all pages for 2 years, 1 month of pay stubs, any social security or alimony or pensions, award letters, things like that. Generally 2 months of bank statements, any asset statements, ID, social security card, and obviously do a loan application. Now, once you send in all your qualifying documents, generally the loan officer re-updates your application. And what a loan officer should do at that point is rerun your entire application and file through something called AUS, which is automated underwriting system. AUS allows us to help take the human element of error out of the qualification process. In other words, it's a safeguard that's in place to allow loan officers to accurately qualify consumers. So make sure that if you guys do get pre-qualified, that your loan officer is running your file through automated underwriting. Now, having said all of that, here's what I would also like to say. No one should tell you when and when not to buy, including me, including your realtor, anyone. If you find something that you love, that you can afford, and you're comfortable with living with potential negative equity decline, go buy a house. You know, go find that house and go and buy it. The problem right now, you guys, is it's just so difficult to find a house that we love at a great deal. And I don't think anyone should settle on anything outside of that. Normally, one last thing that I'm doing is I'm always on MLS. I'm always looking at listings, seeing what's coming online. If a home pops up when I'm done making this video, it's a great deal, it's something that I love, I can literally go out right now, make an offer, hopefully get it secured, and be in a house in 40 days. Because of all of the hard work that I've been doing this whole time while I've been on the sidelines. If you're on the sidelines, if you're losing hope, if you have anxiety, if you're frustrated, understand this, okay? Life is so much more important than being an owner of a house. And plus, you have your whole life in front of you to buy a house. You generally don't want to buy when everyone else is buying, and there's a frenzy and there's this fear of missing out. And on top of that, we've already seen values decline, and I believe that values will continue to decline for years to come. Now, what I'm not sure is what's going to happen in 2024 around March. Now, if we start recession, like most people think we are, come buying season of next year, there should be so much economic turmoil, unaffordability, and pressure that I believe that we will break through 2024 buying season, and that will be officially the call of a crash. As far as the media, I've already personally defined a crash as a 15% decline, a minimum crash. I'm not saying it's only gonna go down 15%. I'm just doing the honor of giving you my definition of a crash, which surprisingly, a lot of people don't give the definition of a crash. Other than that, I really hope you guys build enough confidence in yourself and your abilities and your skills to trust you, because the reality is the most important thing in the housing market is you, the consumer. Don't forget that. Now, if you're out there investing in real estate, you know I wish you luck, and I hope you win.